Hey guys, welcome to another monthly update. We could talk geopolitics and all the craziness that's going overseas. Every day we get a new exciting or terrifying soundbite from Donald Trump, and it's certainly riveting and at times a little scary. I think the thing for me is that New Zealand, we're lucky, we're far away from most things. But we're also, I think, a reasonably resilient economy. We're a low growth economy. We basically produce food and a great place for tourists to visit, but fundamentally a food exporter. And so we don't get the big high growth rates, but equally I think we're reasonably well insulated from shifts in consumer demand. And I think that's the big thing that we're looking into this year. If I look at the US economy, I think the single biggest risk over there at the moment is that Trump, with all of his antics, could tip the US into recession. There's a lot of noise that consumer spending is really softening there quite fast. And the impact of that would be similar to what we've seen in New Zealand over the last 2 years. It's a different driver. This is a crazy president going nuts, but same impact, which is reduction in confidence, reduction in spending, fundamentally dragging the economy into recession. That hurts. That hurts globally because the US is such a big market. I think, from a New Zealand perspective, though, we've really sort of dug in and felt our pain over the last couple of years. We're in a low growth rate environment at the moment, and so whilst I think a broader recession offshore isn't good for us, it's nothing to be too afraid of. If we think about what that means for interest rates will go below 5%. Some of them are already. There's a good 2-year rate out there at 4.99. Those shorter term rates haven't quite got there yet, but we'll get there in the next couple of OCRs. There's another OCR decrease expected on the 9th of April, and that will see the OCR go down to 3.5. That will get the 1-year fixed rate closer to that magic sort of 4.995% mark. I don't expect to see rates go much lower than that, just given the uncertainty and the fact that we're hopefully out of recession. I think we're sort of heading back to a neutral OCR, but there's no need for the OCR to go lower than that. So I'm expecting rates to settle around that 4.99 mark, which means that when you do get the opportunity to fix it at 4.99, there's no harm in taking that. Over to the housing market. Look, we've got a lot of supply in market at the moment. There's a lot of housing supply. Demand is picking up with the lower interest rates. We're seeing more activity out there. We've certainly got a lot more people buying, but there's, it's quite a balanced market. So I'm not expecting to see an increase in house prices of any significance this year. What I expect to see is just transactions clearing that market out, and the market will start to improve a bit more, I think, in 2026. Depending, of course, what happens globally, because if we get into a global recession, that could kick out a decent recovery in New Zealand to sort of 2027, which is a bit further out.